Let us start what is bank reconciliation today. So within few minutes I'll explain you what is the bank reconciliation statement, and in exam question how do we will handle the bank reconciliation question to get the full mark. So just assume this is our business. So the business has opened a current account in the bank. This is the bank, right? So the bank will send you a monthly statement, right? The bank will send you monthly statement prepared by the bank. So we will maintain our bank account in our records. We are maintaining bank account in our records. The bank is sending you the bank statement. So these two statements are prepared by the two entities. The bank will prepare their own statement. We will prepare our accounts based on the principle that it is asset. We apply the asset principle. The bank will apply the liability principle. Why? The deposit made by us is an asset for us. The deposit with the bank, for them, it's a liability. We will apply all the asset principle. That means increase will be debit, that is cash and check deposit will be debit. Then the withdrawal will be credit. Finally, at the end of the month, we can see how much the balance as per our record. This is our balance as per our record. Now you have received a statement from the bank. The bank statement show you. This is the simple format. Bank statement show you at the end of the month how much the balance is. Then you compare. Now see, this is as per our record. This is the balance. This is the bank record. As per the bank record, how much the balance. Now see, two entities have done this. Then mostly sometimes this won't be balancing. Then the question arises, as per our record, this is the value. As per the bank record, this is the value. Why this is not balancing? Then you need to identify the special reasons for the difference. Reasons may be errors maybe in our record. So we have done mistakes. For example, instead of the credit we have done debit, or maybe instead of the debit we have done credit. This is our errors. Or maybe the bank errors. Bank might sometimes do the errors. Then we need to identify what are the errors, or what are the omissions, transaction that we have omitted in our accounts. Mostly the transaction the bank will record here. They won't forget to record, but we might forget to record in our accounts. That may be the omission. You can say the example, then the bank charges, then the standing order payments. Such transaction the bank may have recorded there, but we haven't recorded because we have forget to record it. Third difference reason is due to time. There are two reasons because of the time. One is even though we have issued the check has not been presented for payment. That is called unpresented checks. Then there is one more. What is it? Even though we have deposited the check at bank, but it's not realized. We call it unrealized. These are the biggest reasons that may create a difference in between the balance as per the cash book and balance as per the bank statement. So you must identify when you are cross-checking each other two statement, what are the errors, what are the omissions, and what are the timing differences. Right, so we'll continue with the one of the example. This was tested in 2024 Jan. Question number, I would say 5B. 2024 Jan. This might be very helpful for you all to practice. 2024 Jan. Question 5B, the first stage question. A small question. I will explain in detail how to do the reconciliation. Let us see this question. 2024 Jan. Question number 5B. That's the first stage question. I will explain you how to do this bank reconciliation statement. The question says 31st December 23, Nuwan Hardware has a favorable balance of 277,500 as per the bank statement. Now see, bank statement give you a favorable balance of 277,500. That means that as per the bank statement having a credit balance. And the cash control accounts have a favorable balance. Favorable means debit balance of 225,000. So finally they are asking you to prepare the adjusted cash control account and the bank reconciliation statement. If I draw the format, this is the cash control account, this is the bank reconciliation format, just for you to understand, right? So this is adjusted cash control account. Already they have done the cash control account. Now we are going to make the adjustments. That means there are some corrections to be made in the cash control account. I am going to do all the corrections here. The balance given here, they have given a favorable balance. Favorable balance means it's a positive balance, 225,000. I will do the question in thousand. RS in thousands, then 225,000, right? So given here a favorable balance of 225,000, it's a favorable mean a debit balance. Then the first information say the bank has debited a monthly rent based on the stand-in order given instruction, and this was not recorded in the cash book. It was not recorded. It's not a receipt, it's a payment. You must pay stand-in order payment, that is rent. How much the value? 55,000. So it's a payment you must record in the cash book because we have not recorded in our cash book. Second one, the check issued 128,000 on 30th September 2023 was not presented for the bank for the payment. That is unpresented checks. So unpresented checks and the unrealized checks we are taken to the bank reconciliation statement, not to the adjusted cash book, because we have already recorded those unpresented and unrealized transaction in our cash book. No need to record it again here. So just leave the number 2. Then number 3, bank charges 5,000. It's a payment again. Bank charges 5,000. Then fourth one, the bank has credited the previous month overcharge interest of 12,500 on 31st December. Last month the bank has charged an interest of 12,500. Now the bank is going to reverse it. Reverse it means we are receiving the payment here back. We are receiving the cash, so we can say here bank charges reversal. Bank charges reversal, value is 12,500. Then the last check of the 28,000 deposited to the bank account was not realized, mean it's unrealized. Unrealized mean we will take it to the bank reconciliation statement. Then we can take the adjusted balance carried down here. Then the adjusted balance brought forward value here. Balance the adjusted cash control account. If you add to the debit side, the total comes to 237.5. Then bring the same here, 237.5 minus the payment 55 minus 5. You get the adjusted balance carried down 177.5. Here 177.5. You will take the adjusted cash book balance here to the reconciliation for the month of December 23. Balance as per adjusted cash book. You will put that balance. This is a favorable balance. Favorable mean you can take that balance as a positive. Here 177.5. Then you add unpresented minus unrealized. So we have two figures. Information number 2 says unpresented check value is 128,000. That will be plus here. Then the information number 5 says the value of the unrealized check is 28,000. So you deduct it here. Then finally you can receive the answer 177,500 plus 128,000 minus the 28,000. You get the value here 277,500. This is the balance as per bank statement. You can cross-check the answer you receive with the value given in the question. The question says the favorable balance of 277,000. You have received the answer perfectly. That means you are earning the full mark within just 5-minute work.